Prova, prova, test 1, 2. Hello, hello, test, test. 1, 2. 1, 2, 1, 2. Ready, DJ? Let's go. And thank you. Hello and welcome back. Hello, everyone. Here we go. Test, test. 1, 2, 1, 2. Here we are again. Welcome back, beautiful people. Today we have reached the 4th and final lesson of our series. And today we are going to answer the question that probably matters the most. And the question is, can the bot that we created actually pass a prop firm challenge? Not theoretically, not because the equity curve looks good, even if it's a small test. This is educational. We are going to take the real trades generated by our strategy, give them to Codex, simulate thousands of possible challenge attempts, and calculate one estimated probability of passing phase 1, passing phase 2, reaching the funded account and receiving a first payout. We already did the Monte Carlo simulation with the data that we have. We did a bootstrap, we did the reshuffle, we did block 3, block 5, we tested everything. You can go back and watch the previous videos right here on Funder Pro YouTube channel. If you're watching in Italian, it is in my channel and Funder Pro Italy channel. But yes, we did all the tests. So we started with an idea with the orb. What is an orb? Opening range breakout. So we defined the strategy with a critical thinking, and we created a list of very simple, if this, then that. So it's a mechanical strategy. The entry, exit, and take profit and stop loss are pretty clear. And so we coded it with Codex. Then we gave the full code to Pine Editor. We fixed some errors. We tried some backtests very quickly because it is alive. We cannot stay here hours, but you can do it on your own. This is just to show you the process and how you can actually do it yourself in a very, very easy way and then deploy it live. What I like so much is the two-step classic challenge of Funder Pro. I love it. I mean, I trade props since I can remember. It's been more than 15 years that I'm trading, and since the prop started, the first prop that we had around was the two-step. We had a 30 days to pass phase 1, 60 days to pass phase 2, so it was extremely difficult. Today, you don't have these limits. So I'm not saying it's easy, but we have better chance. And also you have AI. I didn't have that. So it was extremely difficult. Nonetheless, I was able to do, to bring live more than, if I remember correctly, about 6 million of funded account and milk the props for a very long time. And that's how I constructed that's how I built my personal account that I'm trading today. So what we're going to do, and we're going to see today how to move from TradingView to Funder Pro. And we're gonna use a simple cloud copier. So I'm not gonna show it because it's not sponsored by us, but you can just Google and type down TradingView to MetaTrader 5, TradingView to TradeLocker, TradingView to, if you're trading futures, Stradivate, whatever, C-Trader, everything. You can Google it and you will find different options. I'm mentioning today just one of the many, which is very famous. It's called Meta Copier. Before we begin, let me thank Funder Pro once again for supporting this educational series and for allowing algorithm trading. This is huge, guys. You will find the link in the description or on screen. Use the code LIVE to receive the best discount currently available at this very time during our live stream. And if you rewatching the video on Funder Pro YouTube channel, you can enjoy a 20% off any funded challenge, so straight to funded, instant funded challenges, 1 step, 2 step, or futures. And if you want to know how to build your own trading bot from zero, super easy. You have 4 videos for free. I teach you how to do this. And what we're gonna do next is gonna be super crazy. This is the first prop firm allowing this. I'm gonna deploy a bot that we created on a challenge. It doesn't matter. The objective is to deploy it and make it pass the challenge and make payout, of course. But it doesn't matter if it does that, because the important thing is to show you the process and how it's super, not easy, but possible to do that with logic, mathematics, AI, trading view, super easy. If you wanna then learn more, have a personalized guidance on how to do that, follow me on Instagram and send me a direct message. Tell me what you like to trade and what would you like to automate, and I will provide you with personalized learning paths based on your experience and your objective. All right, let's discover whether our bot is ready for a challenge. So again, quick recap. In the first lesson that you can go back and rewatch, we discussed the complete process required to transform an idea into an automated strategy. In the second lesson, we selected the opening range breakout and we transformed the idea into precise rules and asked codex to create the Pine script code. We installed the strategy on TradingView, corrected the first problems, and generated a working backtest. In the third lesson, we optimized the strategy very quickly. We tested different target, different scenarios, different take profit and stop loss, risk to reward, everything. And we enabled the reverse trade, compared long and short results, and we studied the day filter. Do not trade on Monday, do not trade on Thursday, do not trade during the high impact news, for example. And we also added a little bit of commission, slippage, and execution delay. And we added even more detailed intra-bar data. And the final candidate produced the result that you can see here. So it looked interesting. It's not a final result. It's just a small amount of trade, just 77. I highly suggest to have at least 1 year of data, so more than 300 trades, 250 trades. But again, we cannot stay here all day long optimizing. You will do it on your own. So we took just a small portion. So this looked interesting, but the historical sequence represent only one possible sequence of trades. If the same losses had arrived closer together, so if we reshuffle these trades, right? We might have failed the account before reaching the profit target. That is exactly what we are going to investigate today. Imagine that you buy a $100,000 Funder Pro Classic Challenge in this example, I need to make 10% during phase 1. If I pass, I move to phase 2 where I need to make another 5%. All right. At the same time, I cannot exceed the daily or overall drawdown limits. For the daily, I'm good because I'm only taking 1 trade per day, but I should not go below the 10% maximum drawdown. And what our backtest is saying is that we have a 9% drawdown, right? After, let's say we pass both phases and we receive the funded account, then I need to survive long enough and generate sufficient profit to become eligible for a payout. So looking at our 25% historical return, we might think, perfect, the strategy made more than 10%, so it would have passed. But it is not as simple. The backtest also experienced a drawdown of approximately 9%, and the maximum permitted overall drawdown is, in our example, 10%. So the historical result came quite close to the limit. If the trades had arrived in a slightly different order, the account might have failed before reaching the target. The question is therefore not did this particular backtest finish in profit? The better question is, if we replayed statistically similar trading histories 1,000 times, if we reshuffle them, how many times would the strategy pass? That is much more useful. So we go to the strategy tester on TradingView, what we do. From here, we export once again the complete list of trades as a CSV file. And this is important because Codex needs the individual wins and losses, not only the final performance screenshot. I will also provide the screenshot showing the strategy results, the input, the TradingView properties containing commissions, slippage, order delay, and position size. And finally, I will provide the exact Funder Pro rules I want to simulate. Funder Pro, please do not ban this content because this is pure gold. I'm not going to ask Codex to search for the rules or guess them. I copied them directly from the challenge page or my Funder Pro dashboard. For this demonstration, I'm using an example of 100,000 classic challenge with 2 phases. Phase 1 has, as we said, 10% target. Phase 2 has a 5% target. The daily drawdown is 5%. The maximum overall drawdown is 10%. There are at least 4 trading days in each phase. The duration is unlimited and there is no consistency rule. On the funded account, I will use an 80% profit split and a bi-weekly reward cycle for the example. Before running your own simulation, always replace these values with the exact rules shown for your account, assuming that you're using, let's say, you're using a one phase or an instant or a futures or whatever, okay? Now, we're ready to ask Codex the main question. This is the most important prompt of the lesson. So I'm going to send it once. Codex will audit the data, run the simulation, compare several risk levels, and prepare a simple report, right? So we just downloaded the CSV file. We're going to take a couple of screenshots right here. Put it on our desktop. 1, 2. The more information, the better data. The better answer, sorry. All right. returns. We want to have these. Then we want to give, once again, the settings that we used. All the settings. All right. Let me close this. Let me pick up codex. All right. There it is, our codex. Let's give it all the data. All the screens that we took. And the exported version, the exported CSV file. This guy right here with all the trades. There it is. Then we're gonna give codex this exact prompt. Let me copy and paste. I prepared it. Just need to find it. Where is it? There it is. There it goes. Here it is. So this is the prompt. It's huge. I'm gonna read it very quickly. So let me open up the text file so you can see. Let me put it on overlay on the screen while he's running. All right. So this is the prompt. I'm providing a TradingView CSV containing every trade generated by my validated ORB strategy. Screenshot of the TradingView performance, strategy input and execution properties, the exact rules of the prop firm challenge I want to simulate. Start by auditing the CSV. Confirm the number of complete trades, the test period, the profit and loss column, whether commissions are already included and whether each row represents a complete trade or only part of a trade. Reconcile the CSV total with the TradingView screenshot. Do not invent missing data. Then simulate a complete 100,000 Funded Pro Classic two-phase process using these example rules. Phase 1 profit 10, phase 2 5, maximum drawdown 5, maximum overall drawdown 10, minimum trading day per phase 4, duration unlimited, consistency rule known, split 80%, first payout after 14 days, minimum reward request $100. Treat the rules I provide separately from the trading data so I can easily replace them later. Run at least 1,000 complete simulations for each of these risk levels. 0.5 risk, 0.50, 0.75, 1% per trade. Preserve complete trading days when resampling. If multiple trades occurred on the same day, which is not the case for a strategy, keep them together and in their own original order. Use block bootstrap sampling of trading days so that winning and losing streaks are not completely destroyed by random reshuffling. Every simulation must begin at the start of phase 1. If phase 1 reaches its target without violating a rule, reset the balance and continue to phase 2. If phase 2 passes, reset the balance and continue into the funded account. On the funded account, simulate the first 14 days reward period and calculate whether the account survives and becomes eligible for a payout. For every risk level report, probability of passing phase 1, passing phase 2, passing both phase, violating the daily drawdown, violating the overall drawdown, median number of trading days required for each phase, surviving the first funded reward period, receiving first payout, median gross profit at the first payout, median trader payout after the 80% split, and the 50th and 95th percentile outcomes. Also calculate the expected economic result after accounting for the challenge fee that I provide. Clearly distinguish probability of passing phase 1, conditional probability of passing phase 2, overall probability of reaching the funded account, and probability of receiving a payout after starting phase 1. If the CSV does not contain enough intraday equity information to model the daily drawdown exactly, state the limitation and create standard estimate, conservative estimate. Do not describe these figures as guaranteed futures probability. Disclaimer, as always, explain that they are conditional estimates based on the historical trades distribution. Finish by recommending the risk level that creates the best balance between probability of passing, time required, account failure probability, and expected first payout. Create then a clear summary table and simple charts that I can show during YouTube Live, which is what we're doing right now. So this is the prompt. Let's see, he's thinking, he's counting, he's running the numbers. Già preso. So, this might sound a little bit complex. Let me explain what it is happening in a very simple terms. So we gave it our historical trades from the list right here, right? We exported the list. Let me move this out of the way. We exported the full list of trades. Then imagine those trades are cards in a deck, okay? Some are winners, some are losers. Okay, let me clean up this. Some are winners, some are losers. Some days contain only the first trade, while other days also contain a reverse trade. So Codex is going to create a new possible journey by sampling complete trading days from that historical evidence. It then starts with a new 100,000 phase 1 account. Trade after trade, the account moves up or down. If it reaches the 10% needed to pass phase 1, so let's say it goes like this: win, loss, win, loss, win, win, loss, loss, win, loss, win, 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 loss, loss, win, loss, loss, win, win, and we reach the 10% needed to pass the phase 1 before violating a drawdown rule. Phase 1 passed. Codex then start phase 2 and repeat the process with a 5% target. Win, loss, loss, win, win, loss, loss, win, loss, win, 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 loss, win, loss, win, win. 5% reached. Got a bit of a drawdown. We didn't cross the 5% maximum draw, the 10%, sorry, the 10% maximum drawdown, right? And we hit the 5%. Phase 2, the process is repeated and the phase 2 is passed. If phase 2 also passes, the simulation continues on the funded account until the first possible reward period. Then Codex starts again from the beginning, and it starts to repeat the experiment at least 1,000 times, over and over, 1,000 times. by mixing up of these things, adding some slippage, adding some randomness. And at the end, we can see how many simulated accounts passed, how many failed, how long they took, and what happened after funding. It's still thinking, right? Still thinking. It is like sending 1,000 versions of our bot into 1,000 possible challenge journeys. And the most interesting part is that we can repeat the entire experiment with different risk levels, different strategies, different type of challenges, instant funded, futures, right? So let's say at 1% risk per trade, the strategy can reach the target more quickly, but the losses also become larger. This means we may see a higher number of fast passes and a higher number of failed accounts. At 0.25% risk per trade, the account is much safer, but reaching 10% can require many more trades because the challenge duration is unlimited. In this example, slower is not necessarily a problem. So the best settings is not automatically the one that creates the highest historical profit. For a prop firm challenge, the most useful settings may be the one that gives us the highest probability of surviving both phases and reaching a payout. So this is a completely different optimization target because we're no longer asking, how can I make the largest possible return? We are asking, how can I reach the target without touching the failure limits, right? And this is very important to understand. I have my own community with thousands of traders inside, and what I'm teaching today is actually how to understand the market. What are your weapons to understand why and how market moves. And I start from a simple 4 pillars, which is called FIST, F-I-S-T, which is my method. I didn't invent it, but I just put together some stuff. Fundamentals, so geopolitical and economic data. Intermarket, how markets are interconnected. Sentiment, are we fearful, are we greedy? And then technicals, right? Once we understand these, we move to the next level. We pick up a simple yet usable and good and profitable, let's say, strategy, and we start to adapt this method. And when every single pillar, the fist, is aligned, let's say everything is pointing upwards. Fundamental says Nasdaq is good. Intermarket says Nasdaq is good to go up. Sentiment is greedy, so the Nasdaq gonna go up. Technical, we have the orb having a breakout above the range. We're gonna go up, we're gonna go buy. This doesn't mean we're gonna win, but we have a higher chance, higher probability that we're doing and we're approaching the market in a very logical and reasonable way. And when something is logical, it's reasonable, and of course we can backtest this manually, but I do prefer automatic, and we're gonna go to that in a second because this is the core of this lesson. You can follow on that every single day. Every day you can repeat the process because it's been 20 years since I started investing. I'm 39 years old. So I started when I was 19, I guess. And about 15 years that I'm trading. I've been trading the market. So I would say a lot of experience, a lot of time in the market, and here we have the results. So what you want to do is to find a repeatable process that is logical, that makes sense, that you can repeat time over time over time over time, because staying in the market as long as possible is your best chance to being profitable into the long term. Prop firm are the best leverage and chance that you have today to create your own capital. What you do on prop firm is not the same that you want to do on your private account, personal account. I do treat them completely different ways. And remember that I like to use this, I don't know how to say it in English, this figure. Okay, let's try to figure this out. If you are trading the real market, the live market, you're trading actually in a field with the best and most powerful, fast, intelligent, smart algorithm, institution, and minds from all over the world. And trading is a zero-sum game. So one is winning, the other is losing. In a prop firm, you're not competing against them, right? You're not in the market, in the real market. It's like the question that I ask myself is, can I beat, I don't like and I don't understand soccer, but I know Cristiano Ronaldo is one of the top players. Can I beat Cristiano Ronaldo in a soccer game? I cannot, definitely. Can I beat Cristiano Ronaldo playing the PlayStation? I have higher chance, even if I'm not good even at the PlayStation. But you're playing in a simulated environment. Let's say you're opening just for fun, it's not possible, but let's say in a prop firm account of $10 million, it does not exist, you open 10,000 lots or 10,000 contracts. The market is not going to react because you're not placing the trades inside the real market, right? Hope this makes sense. So, completed the audit on an 80,000 total simulations. The CSV contains 77 complete trades across 57 trading days, net profit 25, and 1,000 commission reconcile exactly with TradingView. Commissions are already included. The provisional recommendation is 0.75% risk. Conservative estimate, pass both phases, 99%. Overall drawdown violation, 0.18%. First payout from phase 1, 71.94%. Medium phase 1 to duration, 55, 25 trading days. Median trader payout when eligible, 1,768. These estimates are probably optimistic because only 77 historical trades are available and bootstrapping. Cannot model a new market regime. We said this from the beginning. This is just to understand the process. The challenge fees was not provided, so I forgot to give the challenge fees. So the report gives the economic formula and break-even fee instead of inventing one. Conservative Founder Pro simulation, 10,000 paths per risk challenge and payout probability. So with the 0.5% risk on each trade, we have a very high chance. It says first payout from phase 1, 71.94. Let's give it some worse scenario. Let's say we have more numbers and let's put it down, let's say 65, 68%. It's a very good number to me, because what I'm gonna do is I'm gonna differentiate. Maybe I found this strategy, I can find another strategy, another variation. Let's say this I'm running, I don't even remember, on NASDAQ in the afternoon. I can run the same strategy on the DAX in the morning. I can then find a different strategy, or again, the same strategy with running on gold in the afternoon, and then another one running on the S&P 500 in the morning. I don't know. I'm just in the night, during the power hour, right? Then I have 4 prop accounts with 4 different strategies with all these numbers, and I do have a realistic, the most realistic possible outcome validated with mathematics and probability statistics, right? These are the numbers that matter, because the probability is everything that you want to know when you approach a challenge, when you approach a prop account, right? Let's give it another example. Let's imagine that Codex tells us that we have not a 71.94 but a 50% probability of passing both phases. Now, sorry, both phases it says 99. Let's say 50%. Does that mean the strategy is bad? No, not necessarily. It means that under the assumptions of our model, approximately half of the simulated challenge journeys reached the funded account before violating a rule. It also means that buying one challenge does not guarantee success. Even a strategy with an edge can begin with an unfavorable sequence. This analysis can help us compare different risk levels without changing the strategy itself. Maybe 1% risk gives us 38% probability of reaching the funded account. Maybe 0.5% increases the probability to 55%. In that case, reducing the risk makes the process slower but improves the chance of survival. So that information is more valuable than simply saying my backtest made 18%, so I should pass. We now have an estimate of the journey, not only the destination. So, what do I do once Codex identifies the most reasonable risk levels that we set 0.75? I return to TradingView. I enter that risk value into the strategy panel right here. I assume this, but okay, this is also on MNQ. We don't care. We just need to say we have a $100,000 account. We're gonna risk 0.75% per trade. This is not the calculation model. This is just for sending the signals to the meta copier that's gonna replicate the trades into our prop account, right? So before we are going to deploy the actual strategy into our challenge account, we want to forward test the strategy inside a demo account. So get a demo account, we connect the strategy, with alerts. We had an alert with the orb. We included everything, function called alerts only, and we're gonna call it whatever, orb x funder pro demo forward test. We're gonna create the webhook with the meta copier. This is what I use, but you can find your own. There are thousands of available where you set up your account. So just to make it simple for you guys to understand, you have trading view right here. Sorry, let me do this. It's gonna be much easier. You have trading view right here. Trading view is going to send a buy, right, with a fixed take profit and stop loss. Okay, then it's gonna go to the cloud copier. The cloud copier is where you want to put your account password and login. Let's say you have MT5, right? You're gonna put your MT5 login and password, and the cloud is gonna to send and replicate the same exact trades in your actual Funder Pro MT5 account, right? So we want to test this, and we want to test it on a, first of all, on a demo account for two reasons. One, we want to be sure the connection works as we intended. And the second is demo. And the second is we want to forward test. Means that we want to run the strategy for, let's say, 1 week, couple of weeks, and we want to see that the results aligns with what we had in our back test. So we can collect the actual real trades taken on a demo account, on a paper trading account, give them back to Codex and say, hey dude, I got this trade on a forward test. Do you see similarities, or are we doing something completely different? If it says you're good to go, man, then you can connect the account to the actual MT5 of Funder Pro, right? And begin your journey. Funder Pro. Okay? So this is basically it. Let me just clarify one important thing. So about this area right here. If Codex estimates a 50, 60, 70% probability of passing, that is not a promise. The estimate is based on the historical trades we supply. Future market conditions can be totally different. Slippage can be worse. The strategy can enter a market regime that was not represented in our sample. The simulation does not see the future, okay? It helps us make a more informed decision using the evidence we currently have. Imagine, since yesterday, you were going to your favorite gurus and he tells you, oh, when you see a drop, then you find a liquidity sweep, then you find a fair value gap, retest of the fair value gap, put your stop loss right here and put your take profit right there. Yo, put the tablets in the chat. Right. Okay. I do that. I like to trade live this way. It's a lot of fun. But I also code all the strategy. All my strategy that I use and that I teach are coded, are validated. You can backtest them, all of them, and you can automate them, right? So, can you explain the question when you go to your next favorite guru? Ask a question to yourself and then to him and see if you get kicked out from the server or whatever. Can you teach the strategy? I believe the answer is going to be yes. The next question is going to be for yourself. The strategy is, can I enunciate the strategy? Can I create a list of if this then that, or it's just, so this is the strategy, but then comes to the experience. Then if this then that, if this then that, but then you have to feel it in your gut. That is not a strategy. That is not codable. The butterfly in your chest, in your stomach, is not. Do you want to base and put your money in the feeling in your gut? I don't think so. I don't want to. But if the strategy is explainable, okay, then you can code it. And if you can code it, the next question to ask your favorite guru is, why you're not selling me and helping me to develop a fully workable bot? Maybe they're selling you a TradingView indicator that does not automatically backtest the strategy. They're selling you an indicator. They have this great new idea to make money for them. Why not to, if you can code an indicator, you can code a bot. If you can code a bot, you can backtest the bot. So you don't have to pass hours and hours and hours going back with the replay mode and write it down every trade you take, and then you're not sure you did it correctly. Maybe you fake yourself because you know how the price is gonna react. Maybe you say, well, maybe I'm gonna close this here because I see a candle and blah blah blah. You already passed through this phase. If you didn't, you will. So take care, be careful, understand this, okay? That is what we did is far better than buying a challenge because one equity curve looks attractive or just because you started studying with your next guru. Because this way we know approximately how sensitive the strategy is to risk, how frequently it may fail, how long passing may take, and what kind of payout outcome is plausible. Okay? Right. So this brings us to the end. Across these 4 lessons, we began with nothing more than idea. We transformed that idea into precise rules. We asked Codex to create the strategy. We tested it on TradingView. We optimized the parameters without changing everything randomly. What we did, we included realistic execution costs. We exported and validated the trades. Then today, we transformed the validated results into a practical prop firm plan. We calculated the estimated probability of passing phase 1, phase 2, the overall probability of reaching a funded account, and the probability of receiving a first payout. Finally, we prepared the connection between TradingView with the alerts and the Funded Pro account through a cloud copier. That is the complete journey from an idea to a bot, from a bot to evidence. We're gonna see it because I'm gonna run this very same strategy, and I might probably give it a little more of tests, and I'm gonna deploy it on a Funded Pro 2-phase challenge, and I'm gonna show you guys next week how it's going, right? Once again, thank you to Funded Pro for supporting these live sessions and for allowing algorithm trading. You will find the Funder Pro link in the description on the screen or down below. Use the code LIVE to receive the best discount currently available. It's 20%. And if you want to learn how to develop your own trading bot from zero, follow me on Instagram, Michele Rossi Official, and send me a direct message. Tell me your experience level, the market you trade, the platform you use, and the idea you want to automate. I provide personalized learning paths to help you move from your first concept to a tested and deployable trading system. If you enjoyed this series, subscribe to the channel and leave a comment down below and tell me something. Now, would you buy the challenge if the simulation give you a 50% probability of reaching the funded account? Or would you continue improving the strategy? I'm genuinely curious to read your answer. Thank you for being here. Test everything, control your risk, and I will see you in the next video. Bye.